Good morning. Welcome to the B.F. Anderson Technical Report for January the 9th. Remember, the trend is your friend. It's the most important thing. And we're seeing a very powerful uptrend here in the NASDAQ. Continues to stay strong, making new highs. You know, we all know about what's going on in the media with the news on Iran and so forth. It's not the news that's important. It's how does the market react to the news. And so far, it looks like pretty much of a non-event. So we've also got the moving averages moving up very nicely. Now on a weekly basis, same thing. I will mention again, we are getting a lot of white space in here, which could lead to some type of consolidation or pullback. Just be psychologically prepared for that. Now on this indicator, again, this is a very important indicator. We're comparing as a ratio the NASDAQ, which would be mainly technology stocks, compared to consumer staples, which would be things like toothpaste and soup and real defensive things. So in other words, just common sense would tell you that, you know, when people are worried about recession, especially these big institutional investors, they want to go put their money in things like ketchup because they know that that's going to be stable even in a recession, or beer or whatever. So what happens is as we've noted, we're ever since 2009, we've been getting what we call these mini cycles, because when this line is going up, it's telling you that the NASDAQ is doing better than the staples, which means that, you know, people are optimistic and things are looking positive. Then you go through these difficult sideways periods like this, which was 2014 through 2016. Then we get a big sell-off here, make a bottom, and then we turn up. And this last cycle ran for 28 months. So some thinking could be, and this is just a theory, just an idea, that as we see the economy get better and better and better, we get these mini growth stock cycles. Then we get a growth stock cycle that's roughly substantially longer than the first cycle. Now we've gone almost exactly 18 months of where the staples have outperformed the technology stocks. That appears to have bottomed, and we've now got the 10-week moving average crossing above the 40-week moving average, and the ratio is definitely making a nice move here and looking good. So it looks like, you know, risk is coming back into the market. People are becoming more confident. So the million-dollar question is, are we going to have a growth stock cycle that's going to last longer than 28 months? Well, it could go 5 years. You don't know. So the point being is, it looks like we've gone through a very difficult period here. That difficult period is now over, and hopefully things start to get easier, and they are getting easier. Now, back to another indicator. This is the MACD. This is where we're looking at moving average, convergence, divergence. It's a measurement of momentum. So you can see where you get negative momentum followed by positive momentum. Negative momentum followed by positive. And what we've noticed about investors is we can't get them to put money in the market here, but they do want to put money in the market here. So with this particular indicator, you're seeing that we're now getting a buy signal on the MACD on the S&P. Now, if we go to the value line geometric, which is a measurement of the average stock. This is the problem with these S&Ps and NASDAQs is these are market cap weighted indexes. Last year, the market went up dramatically, mainly because of just 3 stocks: Apple, Microsoft, and Google. So those were the 3 biggest companies in those indexes that drove those indexes. So if you didn't have those 3 stocks, you can see the problem. Well, the value line geometric kind of takes all that out. Now, what's interesting here, we're seeing the first buy signal on the MACD for the value line geometric. So we'll go through this quickly. This is the global Dow. The international stocks are starting to look better. We're getting a buy signal on the MACD. Now, China. We got a buy signal on China even. So it looks like to me that maybe the trade war may be over. We may be looking at better times there. We do have to realize, you know, the Chinese population is substantially larger. I mean, this is the second largest economy in the world. And so we're starting to see a reversal of very negative momentum and now going positive. So keep an eye on China. Small caps, same thing. We're seeing our first buy signal on the MACD in about a year, and so it looks like the small caps are starting to come on. Now, again, a word of caution here. This is a measurement of the put-call ratio, which measures optimism and pessimism on a fairly short-term basis. And we've got a ton of optimism in this market, which is not a good thing. We really want to see some pessimism coming in here, and that way that would be kind of a reason for a correction. You get a correction in the market, your pessimism picks up, your optimism drops off. Now, the thing to realize here about these indicators, meaning sentiment indicators, they can stay optimistic or pessimistic for a very long period of time. So it's really a difficult indicator to use. Now, I thought it was interesting to take a quick look at interest rates. This is the yield on the 10-year U.S. Treasury note. You can see interest rates have been dropping for years. We finally got down to this low around 1.5% on the 10-year Treasury. We've now got a triple bottom in the 10-year Treasury. And just to think about this for a minute, why have bonds done so well? Well, it could be something to do with demographics, meaning that most of the baby boomers, went to bonds instead of stocks after '09 because they're worried about their retirement. But now the oldest baby boomers are now in their mid-70s, so we're of the opinion that the demand for bonds has peaked, and so we've got a triple bottom in bond yields, which we think is a bottom. So we think interest rates will probably work higher from here, which would be negative for a bond investor because as rates go higher, the value of the bonds go down. Now, back to China for a minute. This is the Shanghai Stock Index. Now, I'm not a real big pattern guy. I do prefer just to look at trends, but there is a pattern that repeats quite a bit throughout time, and this shows a inverted head and shoulder formation, which sometimes marks a bottom. So here's your left shoulder of the Shanghai Index, here's the head, your right shoulder, and we're breaking out. So it does look like the Chinese stocks are gaining some momentum. Now, I did want to take one other quick snapshot here of the value line geometric, and you can see here as a comparison that the S&P is making new highs where the value line geometric is not. Now, if it starts to make new highs, which I think is coming because we got that MACD buy signal, it's telling me that when the generals lead, the troops will follow. That's kind of a saying on Wall Street. And so basically what we're looking for is somewhat of a change here, and a move on the value line geometric above 600 would really be a positive thing. Now, into the top five. We're back onto the semiconductors, advanced micro devices. Very strong uptrend, holding the 10-day moving average. Semiconductors continue to look good. Dexcom, medical supplies. This has to do with the treating of diabetes. The stock has kind of had a little bit of difficulty here, but now starting to rally again. Lam Research. This is another fabricator of semiconductors that looks very good, as you can see. Qorvo. Qorvo is one of the best ways that I've been told to play the new 5G technology that's coming. Now, 5G is going to be interesting, especially if Elon Musk and SpaceX start throwing a bunch of satellites up into a low orbit that will provide the 5G signal instead of towers. That is a possibility. Now, Tesla continues to make new highs. Skyrocket volume here. What we're basically seeing here is what I believe to be a short squeeze. This company has 30 million shares of its outstanding shares shorted, which means that at some point the people that are shorting the stock have to buy the stock back to cover the short, which is driving this stock up. But there's a lot going on here. There's a new battery technology that they're going to discuss in about 60 days, and they're going to call it the Battery Day. This could be the tip of the iceberg of a major change in a technology, which is where we're going from fossil fuels to battery technology. It's very controversial, as I know, but if you have any questions on these stocks, give me a call. Thank you very much.